back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Someone asked me this week why Mortgage Matters in Minutes, because we don't want to talk for hours about mortgages, and we can concise the education and information to get you the facts right away. So today is a very important one because we see this often of everybody wants to become debt-free and use all of their money towards paying everything off. So is it always the best financial move to be debt-free? And the answer is it depends. It depends on the kind of debt that we're talking about, and it depends on the kind of asset you're talking about. We always strongly believe in being diversified with your stock portfolio, with your bonds, with all of your assets, because markets go up and markets go down. Just like in real estate, just like the stock market, we want to have a good balanced portfolio of different sets of investments so that they counterbalance each other when one thing happens or not. Obviously, the big allure towards having debt or having no debt is you've won the game. You don't have any debt that you're paying off per month. Your house is paid off. But that might not always be the best situation. While emotionally, it feels really good. Psychologically, it feels good. And also culturally, whether we see it on social feeds that, you're working towards paying your debts all the way down, or you do have your debts paid down, it might not be the best financial decision for you. And there's people in the world out there like Dave Ramsey that we believe many days does not give the correct information in regards to credit, in regards to financing, and in regards to how you should manage your debts. So when does debt-free make sense? Yes, we would never advise someone to carry high credit card balances or payday loans or paycheck cash deposit places. Anything that has a negative type of debt, which is those, we would tell you to, yes, have your credit cards paid off every single month. Also, if you might be getting close to retirement or you are in retirement where you're not liquidating as much investments to pay your bills every single month, is another great time to be debt free. But I can share with you, even younger people can be debt free. But what we want to talk about today is when being debt free might hold you back. And that's what we call opportunity costs. And instead of taking a large sum of money that you've made and apply it down towards a loan, what happens if we take that large sum of money that we've made and reinvest it and possibly borrow more money? And again, a lot of people come at us saying, okay, our goal is to get you to borrow more because we make a higher commission. No, these are all mathematical formulas that we can show you how this works towards your benefit if you were to use your money. So mortgage is actually a good debt. It helps your credit report, it builds credit, but also over time, your balance is going to continue to go down and the asset value is going to continue to go up. So yes, a lot of people would say at least get to 20% down. I would say most time for first-time home buyers, that doesn't always make sense. People don't have that much money in savings. But putting a 5% down might still make sense versus 20%, and then taking that extra money that you have in your retirement account and start investing over there to build your equity. Some people, by taking out a mortgage, can still write off the interest. And again, today's money that we're borrowing at a rate might be much cheaper than the future. But what we do know is with inflation, your income in the future is worth more than it is today. So even if you're borrowing $200,000, $300,000 and your payment is $2,000, $3,000, whatever, I'm just rounding here, in the future, that $2,000 or $3,000 will feel like a lot less than it is when you start the loan, because most people's income is going to keep up with inflation, that 2 to 3, 4% a year, whatever the number is. Right now, I know inflation is going up much faster than that. It might not feel like borrowing money makes sense, but when we look at all the places where we can put money, whether it's paying down debt, whether it's investing, or whether it's paying off credit card debt, they all have their give and their take in some other types of situations. So again, we want to stress to our clients, do the best financial thing for them. Not every client that we have has the exact same financial goals. Some want to travel, some want to enjoy life before they get too old and can't travel. Some want to save for retirement to live, very frugally, and some want to save for retirement so they can do whatever they want. Some people want a house now, and some people aren't concerned about having a house. So there's no perfect scenario that I've found that anyone said that they've won the game of being the best financial picture, because every financial picture looks and feels different. But what we do know what wins is having a diversified asset and debt portfolio. And again, we're not advising anyone to take out more debt or extra debt that they cannot afford, but we're saying if you're looking at taking out mortgage debt, that still can be a very good debt if you're looking long term at the way home prices have appreciated and how your loan balance has depreciated or declined or fully amortized over the life of the loan. Again, we're not going to be able to ever answer every single financial question here in regards to, should I put my $1,000 here? Should I put my $20,000 here? Every situation is a little bit different. And we've seen that over 25, 30 years of thousands of clients. And we have to get to know them to figure out, what are your true goals? Do you want to buy a house now and never upgrade? Or do you want to buy a house just to be able to get into a home, build some equity, and then upgrade? So again, there's lots of different choices. And that's why we, as mortgage loan officers and mortgage loan originators, are here as a professional to help guide you and go over the pros and the cons of what you should and what you shouldn't do. Because I can share with you, even though I would tell a client, here's what I would advise, it doesn't mean that that is what they want to do or that is what they're going to do. They like to see the numbers on paper to see that in their own budget and in their own mind and how that's going to apply to their everyday life. So again, we applaud you if you're debt free. We applaud you if you have a 2% interest rate on your mortgage, and you're winning the game right now in both of those caveats, with home prices continue to increase and keeping your debt at a low manageable level while still having income from current jobs and current markets. We're here to answer those questions. We're here to help guide you and get you information. So reach out to us, use us, talk with us. We advise and talk with clients all day long that might never become an actual mortgage loan of how we receive compensation, but that's what we're here for, is to help answer and guide you the correct financial way for your mortgage needs and really how your financial picture looks with a mortgage and a home in there. I'm Brent Rasmussen, owner of Mortgage Specialists. Reach out to me anytime, 402-991-5153, or you can check us out on our website at mtg-specialist.com. Let me know down below here what questions you may have in regards to your financial picture or how you feel debt is involved in your budgeting on a month-to-month basis. Have a great rest of your day, and we'll see you here next week. Mortgage Specialists. Driven, trusted, reliable.